Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. So make it a great night, folks. This quote is by Maya Angelou. I believe the most important single thing beyond discipline and creativity is daring to dare. Market boys, let's take a look at it out here. We have the Dow Industrials up 169, Nasdaq up 60, S&P's up 24. And can you say failure, folks? What you're going to see out here today, the Fed announcement just come out. It's going to be status quo. They got rid of the considerable time. They dropped that inside the statement. They put patience. Market blast off, gave it up in spades. You know, I suspect what we're going to see here as we're coming into this close is going to be more of a sell-off. We'll run through all these babies, but bottom line, you get the spike. This is bear market action, folks. It didn't get over the highs of yesterday, selling off right from the highs. Gold contract down 560, trading at 1,189.11 cents at $15.83 an ounce. Platinum is flat. Light sweet crude flat at $56.14. Bonds. The bonds refuse to back off. This is pretty amazing, folks. You have the 10-year bonds down 16 ticks with light volume. That is setting up another ABC structure on the way up. Just a mind blower? Yeah, that's what it's doing, though. We're at 127.04. 30-year off 23 ticks. Light volume also setting another ABC structure on the way up. That's going to blow away the October 15th high. I expect what you're seeing in the 30-year, it's actually going to blow away the 2012 highs, okay? You're running big numbers here and low yields. King dollar. You talk about volatility in spades. King dollar right now is up 773 ticks. It just was up 1,000 ticks, and even with King dollar up 1,000 ticks, they couldn't smack gold down. Volatility all over the place. Euro down 145, trading at 123.66. The yen is up 1.90 at 118.31. Our phone number is 877-927-6648. Give us a call, folks. What's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You get a monster ABC down. That's what you have, folks. Your 8-point on this cash S&P 79. We'll see yesterday, I suspect that was the B point, which is 1972. And that gives you a monster at like 107.8 to B. If that is what we're talking about here, you're talking about 1905, the next leg on the way down. And that bottom the S&Ps want to go after, the high of the bottom is 1874, the bottom is 1820. Dow Industrials, if we take a look at the Dow Industrials, what you have with the Dow is this. Yesterday, Dow goes up big time. Dow yesterday gets to a price point of 17,427. You end up closing at 067, so you come down another 350 points. Today, replay of it. This is bear market action, folks. You got to 17,371. Sold it off fast and furious. Right now, you're at 17,226. Same type of situation. They've already sold half of it off. We take a look at the E-mini. You take a look at how this testing procedure gets done, highs and lows. What we have is this. The E-mini, the high of yesterday out here, folks, was 2009. That was 2009.25. We were trading up all day, right, right into the meeting today. 2 o'clock was the announcement. At 2 o'clock, the E-mini shot up from 1989 up to 2007. Bottom line, you had the spike in volume. It couldn't take out the high. Now, when you come into a swing point and you can't take out a swing point, that's pretty intense. Bottom line, gave it up. Now, if we bring this back, I'll bring this back a little bit closer, and you're going to see this action. The action from that price point, meaning at $1,400, you come down, first leg, come down with some volume, nothing heavy. Next leg, which is 10 minutes ago, down, some volume, nothing heavy. But what you have here, what you can glean out of this, every time it's trying to bounce right now, it can't bounce. That's on the 10-minute. We're up 24 bucks right now. I expect what you're going to see when we come into this close right now is that this thing is going to be lucky if it's up 14. We're at 1989. We can settle out at about 1976. which is another 13 points down. So this is going to be a wild close coming into the close. If, in fact, that's what you have, that's going to be about as intense as you get. Why? That's bear market action. When you have fast counter-trend bounce, they sell off in a second. When that sell-off, folks, what you have there, that is monster operators selling into the market. They're sitting there praying, saying, thank you, God, for letting me have that bounce. Boom, give it to them, and give it to them fast and furious. Gold contract. What do we have with gold? Bottom line, this is about as intense as you can get, folks, meaning they can't whack gold down when the dollar index spiked over 1,000 ticks. Right now, the dollar index is up 883 ticks. What gold is this? We had a low out here today, 1182. We're at 1187 right now. You've done 146,000 contracts, and that is weak. I mean, in an extraordinary way. You're going into 342,000 contracts. You're at 1188.30. Now, see, this is going to get interesting because the low of yesterday that had 223,000 contracts was 1187.80. We're back inside that. I'd like to see it get back inside it even more. But bottom line, you're back inside that. That is a rejection of lower price with lighter volume, and we'll see where that shakes out. But that's telling me that gold still wants higher price. The bonds are right now, the consistency in the marketplace, and specifically what I mean, they consistently have been moving the exact same way, meaning upward volume, backward lighter volume. What we have out here with the 10-year today is that the 10-year is doing 1.1 million contracts. Yesterday we went higher with 1.46 million. This is built. This is what a structure this is, folks. It's just an amazing structure. This is building. Now the 10-year is building an ABC up. Your A point on this is 125.17. Your B is 128.8. So you got what that's. It's actually 2.5. So that would get you. The C's 126.28. I'm going to round that to 127. That's 129.5. There she is. And 129.28 is the October 15th high. That's where that wants to go. The 30-year bond, what that had done yesterday, it got into it tested the high, had lighter volume. You expect lighter volume anyway, by the way, because of the way that spiked. Bottom line, what the 30-year is doing now, that's building cause to get up and over the 116.60, and your price for that, this is just a mind blower too. So you got 146.16, and we got 139. So 46.7 gets you 155. And if we take a look at the continuous contract here on the 30-year, 155 is the number to remember. And 153.11 is the high of 2012. What that is saying, the way that's set up right now, that is saying that the highs of 2012 inside the bond market more than likely are going to get taken out. Pretty intense. No doubt about it. Our phone number is 877-927-6648. Let's go take a look at some of the high-volume stocks. And what you have here, by the way, is it looks to me like you got a low volume out here today. And that would make sense in the context, let's see, whoops, wrong one there. Let's see. What we're going to have is this. You spike higher out here today. Right now we're at 660 million on the N50 versus 1 billion on the way down yesterday. On the NASDAQ, you're at 1.7. Oh, that can come in pretty close. That's going to come in. That's going to come close. We'll see whether that's going to have to come in less than 2.2 billion in order to have a ABC structure on the way down. Some of the high volume stocks in this market right now. This is what you have. You have, whoops, put this out here. There she is. We have Apple is up $1.60. You got Micron Technology up 46 cents. ExxonMobil is up 2.31. You get Citigroup is up 79. Bank of America is up 35. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered what exactly is Den is a lively community where professional traders and investors can meet, exchange ideas and information, and a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials right now up 224, Nasdaq up 75, S&P's up 32. Let's go over to our man, Mr. Daryl Martin. Daryl has an outstanding show every trading day here, folks, 1 to 2 Eastern Standard Time. Specializes the Nadex platform. We also do a show from 10 to 11 Friday mornings. And, of course, if you haven't test drove the Nadex platform yet, it's very easy to do, folks. You come over to our website at TFNN. You see the banner on the top and the side. You can hit that banner. bring it up. They'll put $25,000 of paper money into your account. You can learn how to trade these contracts. And in the volatility and the kind of market that we have right now, folks, okay, it is just one dynamic market to trade. Why? Because your trade is your stop. And in this particular case, when you're talking high volatility, up, down, and all around, guess what? Bottom line is that you don't get shook the markets. Daryl Martin, what's going on?
What's going on, man?
How you doing?
I'm doing great, man. This volatility has been insane all week long. So, yeah.
There's no doubt. And what you have here, folks, okay, when you're talking inside the Nadex platform, whether you're trading commodities, currencies, or indices, all of the above, you can trade. You can trade these on a daily basis. In fact, you can trade them a lot less, right down to a 5-minute basis now, which is pretty amazing. So coming into this, Daryl, how are you trading this coming into this? I know you like putting on a few different positions so that you're literally just looking for volatility more than directions many times in these news events, right?
Yeah, I mean, on this one, I was looking for some good IV, butterflies, condors. They really weren't there.
Okay.
The premium, I just wasn't as much as I wanted. This morning, obviously, had some great trades just on the volatility of the morning. Expect to get to die out around 11 or 12, which it did on pretty much everything. By 11 to 12 on most indices and FX pairs.
Yeah.
Went quiet, was looking for some condors. Couldn't really find much in there. And then, of course, the next step is if you don't find much there, then wait and then look for trading some of that price action after the FOMC comes out, because you get some really, really good moves, especially like on the currencies and things like that. And you can go in there and, I mean, you gotta get your bar size down a little bit, But, I mean, currencies are moving like 30, 40 pips, like constantly right now.
And folks, okay, and we'll talk about this a little right now. The dollar, folks, okay, went from a price point out here. So this would be, well, this is the dollar index, but if you were trading the dollar against the euro or the dollar against the yen, you'd see some real action. The dollar index went from 88.31 up to 89.28, and it actually got as high as 89.36, which is over 1,000 ticks. So what happens inside the platform, inside the Nadex platform, you only realistically need about 21 ticks to get in the money pretty good. So there's no doubt that if you do, that's the place that you want to be.
And one of the ways to check it out, we've talked about this some on the 5-minute binary contracts.
Yes.
Well, there's this fast volatility going on the FX. I mean, you got to be quick. You got to be there, ready, hit the button. You can't wait.
Right.
You can't think about it for 5 minutes, obviously, right? Because it'll be over.
That's right.
But I'm going down to like 3-tick charts here, and literally just as the market's moving, just basically trading with the chart, with the trend on the chart on those 5-minute contracts, and doing at the money, maybe a little bit in the money, out of the money contracts, and going and grabbing $20, $30 profits. And I mean, it's 5 minutes, boom, it's popping down, pops up, take profit, pop, back and forth. But you're getting some great volatility, knowing that you should expect volatility after FOMC. You should expect it during the press conference. Then go and take advantage of that. You only need like 3 ticks for the thing to work for you. So, I mean, we're getting 10, 20, 30, 40 ticks. So like you're basically, your trade in, it's done, and you're having to wait for the new 5 minutes to come out. You're like, come on, hurry up. It feels like the 5 minutes aren't fast enough whenever you get that kind of, that kind of volatility going on.
There's no doubt. And, what you do have out here, folks, is that the currency volatility, I suspect, is not going to stop for quite a while. I mean, it's unusual that currencies can move around that much, but you saw the other night, not that you can trade the ruble out there, but bottom line is that when a currency can be down 19% in a few hours, that's insanity. And it just doesn't go away. That's what ends up happening. It converts into other volatility moves inside currencies in general.
Exactly. Looking on over at pound dollar over here, I mean, this thing moved down 3 deviations.
Yeah, that's what I wanted to ask you about. Exactly. So the deviation moves out here today, I would say probably in all of mine, well, in the S&P too, probably was pretty intense, right?
Yeah. If I pull up the S&P, it takes like 2 seconds. And it flew on up, and we had like 1, then 1. Basically, we stopped at 1, right around 12.
Okay.
And then things backed off. And then we got another little pop back up. We're actually sitting right about one deviation, which is pretty sweet.
Oh, that's cool.
I mean,
okay, so let's bring this up. So if you're in your car, right now, yep, I'm looking at Daryl's analyzer, and you can test drive this analyzer, folks, by coming right over to our website at TFNN. You can test drive it 30 days, absolutely free. And inside the analyzer, he has the deviations. And these deviation levels, of course, change every day, but they're coming off real prices, which is so cool. It's not a lagging tool. That's my point more than anything.
Exactly. Yep. And we got to basically watch those markets fly right on up there. And I think it's one of the things, as traders, we always want to ride that trade, all the way to the moon. And but just having that realistic expectation of when is it going to pull back.
Yes.
And when should I be, looking to maybe take my profits, tighten my stops. And that's really what the deviations are doing for you. If I go with my pull up, I think I have one deviation. I had up 12. But on 315 right here, we popped up deviations right there.
Yeah.
We hit one right at noon, which is about when things slow down anyway on the S&P before FOMC. So you got 2 hours. It oscillates right there. It pops up to 1.5. It pulls right back. You can see it hesitates at 1.7, right back up to 1. Sitting just a couple points off of one deviation expected move right now. And it's like, hey, don't expect a whole lot more. Out of the day.
Right.
And which is a great thing to do. It's like, you know what? I mean, I can look for reversals, I can look for them in the trades, but I mean, I shouldn't be going in looking for 10-point moves right now. Not for the rest of the day.
Yes.
And that's what it does. Hey, chill out, back off. Don't necessarily take that long trade just because you're, Even
if you had been right for the day, meaning, folks, that if you're long this morning and you're coming into it instead of laying into that right now, you wouldn't be laying into that trade. You'd be basically tightening up your stop, saying, okay, it's done what statistically is very, not hard to do, but if you start hitting deviations, period, okay, that's what markets on the way down, all the way up, that's where they're going to start breathing. They have to breathe.
Exactly. And this is instead of being the past statistics, we talk about this as the implied volatility, the expected movement statistics from options.
Yes.
So that gives it a lot more accuracy. They're a lot more sensitive.
Right.
You could have a really volatile day yesterday and have small deviations tomorrow. You could have a small volatility day yesterday and have big deviations today. And you would never get that on historical stats, on historical deviations or standard deviation.
Yes.
And, looking at NASDAQ right now, I mean, it's right at one. You can see it's been just wrestling at one deviation here since FOMC.
Okay.
So ran up, came down, ran back up, but still right in that same range. And not necessarily looking to take off. We're getting some good volume to the upside, checking out some of my other screens here.
Yes.
But, it's there was time to make money. Now there's time to use caution. Now if you're long, that's awesome. Trail that stop. Keep trailing it. But, don't be looking to add on, like I said, layer into a position at that point.
Right. Listen, Daryl, you have a great night, safe night. Of course, we look forward to the show tomorrow.
You too.
Thanks, man. Have a great one. Have a safe one. You stay right there, folks. Coming right back. Dow Industrials right now up 279. Nasdaq's up 88. S&Ps are up 39. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price target price of each. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights, visit TFNN.com.
In quiet markets, investors search for new e-based exchange registered with the Commodity Futures Trading Commission. Like most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials right now up 264, NASDAQ up 86, S&Ps are up 38, and the Federal Reserve, so they come out with their statement at 2. What the statement specifically said is that the Federal Reserve said it will be patient on timing the first interest rate hike increase since 2006. It's pretty amazing. We're in 2014 and we've been in a zero-rate environment. The committee judges that it can be patient in beginning to normalize the stance of monetary policy, the Federal Reserve Open Market said today in a statement in Washington, replacing a calendar-based phrase with language that gives it more flexibility to respond to economic data. The reference to patience signals policymakers are trying to give themselves more flexibility, said Jay Byerson, global economist at Wells Fargo Securities in North Carolina. Bottom line, folks, is that when you look at the rate structure, technically when I'm looking at the bond structure here, these bonds want to go higher. That's saying our rates are going to go lower, market-wise, flat out. When you go worldwide, guess what? What we still have, which is just amazing, the 10-year right now is still at 2.1. So the market is not paying attention to Yellen saying they're going to raise rates. In fact, if you go back and listen to anything that was said last year, everyone thought, well, let's put it this way, maybe many analysts thought that this year we would be running at rates dramatically higher. The bottom line is that nothing got raised. When you look around the world, what you have happening, and you got to remember it's a world market, is that France is at 0.8%. Germany's at 0.5%. This is for a 10-year now. Italy is running at 1.9, 0.7. You know, when you take those numbers and we look at what's going on, bottom line is that it's not even close. It's not even close that our rates are going to go. Rates are high right now. They're high in the correlation of where the rest of the rates are in the world. That's what it comes down to. We take a look at some of the Dow stocks out here. What you have out here right now, we got. Okay, you have Boeing up 66 cents. ExxonMobil's up 250. We're going to go to those oil service stocks, see what they're looking like. Oxy's up 316. You get Big Blue up 35. Big Mac is up 255. You get Procter & Gamble up $1.25. Walmart is up 11. If we take a look at the inside the Dow Industrials as to what is moving it higher, what you have is this. There's not one Dow stock right now that is in the red. And the Dow's only up 253. That's not a huge deal. The leader out there pushing it higher is that you have Chevron. That's up $4, trading at 105. United Technologies is up 341 at 99. ExxonMobil is number 3 rather, pushing it up 261, and Big Mac is up 260. The weakest ones out there inside the Dow is that you have GE up 6 cents. GE cannot get out of its own way. GE's going to trade a lot lower. IBM is up 49 cents. United Technologies is up 49 cents, and Caterpillar is up 48 cents. Now, let's go over to this oil patch and take a look at oil. CLF. Let's see what we're doing here. So, inside the commodities right now, we got crude oil down 4/100ths, so that's really flat. We take a look. We're at 56.24, and 56.24. Oil can't get out of its way either. You got a little juice on it today, though. Okay, so the high of yesterday is 57.45. You're at 56.24. It went to 59.27, and inside of that, so check this out. This is going to get interesting here. Intraday we'll do this. Intraday, oil's not done going down. This is going to be crazy. Okay, so intraday what we had is this. At 11:50 a.m. this morning, we went from 56.83 up to 59.27. It still didn't take out its swing point, which is sick. Then it comes right back to the breakout area on a 10-minute. Now it's going to try to basically break down. Couldn't break up. It's going to go after 54.67 again. And we'll see whether we get volume as it moves into those lower prices. But that's how that is set up right now. If we go take a look at the XLE, XLE right out here has gone from $100 down to 73 yesterday, 72.51. You have volume at the low. What you're going to have here is this. At least the lows of yesterday will get retested. That's the way this is shaken out right now, because we're going to have a high volume low this week. What I expect, though, here, this is the easier way of doing it. Well, $69. Okay, so we're at 77.26 right now, and let's see, we've done 159 million shares. It's Wednesday. We're dealing with what I want to calculate just quickly here, folks, is what we're dealing with. So 159 million. It's going to be 259 million. So we're more than likely going to come in for the week at 259 million shares. If we put this on a weekly, let me see what we got. Yeah, you're gonna have a lower low with higher volume. Last week we did 205 million shares. What that sets up that low will get tested again, and we'll see whether it wants to push into lower price. Right now we get the Dow up by 289, so you get a surge coming into the close versus a sell-off. I believe. Let me pull up that S&P for a second. Okay, so ESH5. It's pretty amazing that we are in 2015. I haven't got used to putting the 5 after these future symbols. Okay, it's not going to make it. So what we just did is this. The spike at 2 o'clock got us to 575. That spike had 161,000 contracts traded. We just come into that, and we have, okay, that's the first spot. So we're a minute into it. So this is what you need. In order to break up and over, it just tested it right to tune. Yeah, it did. It got over it. So it got over the 2007.75. That has 161,000 contracts in it. The last 10 minutes, we only did 49,000 contracts. So what that sets up is that you have 8 more minutes left inside this bar. I suspect what you're going to see is this. You're going to see a close under. Well, if this is what you get a failure again. It would be 207.75. You get a close over that in 8 minutes. Well, then it's going to have a shot to get up and over the 211 from yesterday. The way it's trading right now, however, the volume characteristic, it's not even going to be close. If I take up the S&P, in case you don't trade in the futures, I'll show you how you can look at this in the SPY. So if you take a look at the SPY, what you have is that the SPY at a price point of 201.99 had 18.7 million shares. Right now, we came up to that with 7.3 million. So the characteristic's going to go like this. 201.99. Right now, we're 3 minutes over it. And what you're going to get, you get 7 minutes. And one of our tigers is saying that he was showing 208.75 at the 5 minute, at the 2 o'clock spike. ESH5. Let me pull that up again to make sure that I was. So I'm looking for. No, that it just hit 208. The 208.75 that you're talking about was just hit. The 2 o'clock spike is 207. It's the 207 number. That's the bottom line. 877-927-6648. Let's go over and take a look at the XAU. XAU, the HUI. XAU. The XAU out here is up 327. And what we had done yesterday is this, is that you're coming into the swing low that was out there from the November, and 57 million. We were coming into that with 47 million versus 57 million. We're over the, we're at 66.31 right now. So what that is that bottom line is that you rejected lower price. We'll see if we can get some juice behind this move out here. But the XAU rejected lower price, had lighter volume. The HUI, we take a look at the HUI, which is the Gold Bugs Index. Gold Bugs Index was coming into 40 million. Yeah, 40 million, and we did 26 million. That, in both cases there, you can see that you got into the swing points, you had lighter volume, rejected lower price. You can't bust them down, guess what? That means it's going to go try to bust them higher. If you do have an interest in the metals market, folks, okay, you have a few more days. You have until this Sunday to get the 60 for 600. Yesterday was the 660th edition of the Gold Report. We have a special that's going on right now. 60 editions for $600, only $10 a week. That is a 50% discount. You also get a copy of my book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. That will be sent also right away. You stay right there, folks. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow Industrials up 300 right now. NASDAQ is up 100. That's a big number. S&Ps are up 42. Percentage-wise, this is what you have up here. The NASDAQ is up 2.1%. Dow Industrials up 1.7. The S&Ps are up 1.8. And what you did have out here this afternoon at noontime, Cuba and the U.S. are going to begin to normalize relations. And it's about time, folks. It's pretty amazing. 50 years later, we got an island 90 miles off our shores, and bottom line is that we had, when I think about this, it's crazy. We had a war with Vietnam, and I believe 33,000 people died, and we had regular relations. This is just a political deal. It was terrible, of course, in the 60s when that happened. Bottom line, that I see that as a really dynamite deal for the people in Cuba, period. So we'll see what type of commerce gets done. What is going to get shaken out there in a huge way is the ownership issues over the course of so many years. But what you definitely had, I can tell you, what you definitely had in the state of Florida. What you had in the state of Florida is that many of those large companies that were in Cuba, you talk about entrepreneurs, these folks came to Florida, came to the United States, and built just as large companies, period. So, pretty amazing. Okay, market-wise out here, we go to the Dow first. Dow Industrials, you're up $300. That's not going to give it up now, but you're still not over the highs of yesterday, folks. That's what it comes down to. Volume-wise, what we have, let's see where we're shaking out with volume. So we have... Yeah, you have light volume. So bottom line, this is a market that still wants to go down. Right now, we're at 770 million on the NYSE versus 1 billion on the way down. You get 7 minutes left. That will come in at about 900 million, though. NASDAQ. The NASDAQ had some juice. I suspect that juice is probably still in there. Yeah, the NASDAQ has 2 billion. We'll see whether it gets over 2.2. The composite itself is over the highs of yesterday, and so that would be saying the composite's at 4646. That's saying the composite can run up to 4674. So that's about another 30 points. Where I'm going with that, that's at the bottom of the first big leg down, which was on December 9th. We go over to the SPY. We take a look at the SPY to do that correlation. The SPY just came up and tested the highs of yesterday, I think. That'd be 202.39. We hit 202.34, and you're selling off slightly. So the S&P also didn't get over that. Russell 2000. If we look at the Russell 2000, the IWM did. The IWM right now is trading at 116.77, and that has some strength. The IWM, that can actually get up to 116.96. We'll see whether it can follow through its strength. But we had come down 2 days ago with 62 million shares. You're going up today with 63 million. So that's saying that, yes, you can get to those swing highs that were established out there in November. The IWM never got to its high. The high that was established in the IWM was July 1st. That price point was 120.97. What is really unusual out here, there's no two ways about it, is that they can't whack gold. The gold stocks are up. Gold is down 480, with King Dollar being up 937 ticks. What that is saying is that King Dollar is not going to hold. And if we go over and look at King Dollar, technically this looks good. Technically, folks, it's saying it wants to go to the highs once again. That high of 689.79. We've done 60,000 contracts out here. That's a good number. You're right next to the highs. That's saying it's going to basically get hit, meaning that high is going to get hit. And yet, the gold contract is not down. We go over to silver. We take a look at silver. What we have with the silver contract right now, it's at 1573, and you get light volume. Silver doesn't want to go down either. Inside the whole commodity complex, what we have, you have coffee. Coffee's off 3%. Hogs are down 2%. Cattle's off 1.8%. Wheat is up big. Wheat's up 4%. Natural gas is up 2.4%. Gasoline's up 1%. Gasoline's going to get a lot cheaper. It looks to me that the oil route on the way down, folks, is not over. The way oil is traded out here today is saying that, we had a counter-trend bounce out here. You got to 58.98. You're at 56.22 right now, so it gave it up. This thing's not over. That's all that was, is a counter-trend bounce. Intraday, what we had is that you had that first spike, but after that you had no follow through. The first spike was at 1200 on noon time today. FCX, one of the targets wanted to look at FCX, and FCX is up by 94 cents. It's trading at 22.13, and I wouldn't be buying FCX. What you have with FCX is this. You need a few signs of strength, and there's no doubt. This is a great company, but great companies, folks, can go down in price also. It's a large gold, copper, and oil company, period. But what you have is that Freeport-McMoRan got into its bar from $26.90. That is the high-volume bar from 2008. When you get into something like that, the probability goes that you want to go to the bottom of that bar. So if you're going to buy FCX, make it get a sign of strength first. Wide price spread, accelerated volume. Today would be a start. We'll see if it could get if it could get an expansion tomorrow, like to $25, then you could buy a pullback. Then that would be saying that you do have large buyers into the stock as you see that wide price spread, accelerated volume. We go to Big Mac. Big Mac is one of the leaders inside the Dow Industrials today. That's a dead cat bounce. Big Mac is up 295. If we go over to Federal Express came out with their numbers this morning. Big problems with Federal Express. Pretty amazing that the day and age, that great transportation system, great everything. That's down 649, trading at 167, monster volume. This is a break to the downside on FedEx. We take this and we put it back a couple years. What you're going to see is that your first stop is going to be 152. Well, 161. We hit 163 today. 161. We'll see as it gets down into those levels. Does it want to bounce off that level or just keep going? IBM, still big problems. IBM is going to be a shocker. IBM setting up for another leg down. We come down from 210 to 161, the first leg. Second leg is going from 161 down to 151. And the way this is set up right now, it looks like it wants to take one more leg down. You stay right there, folks. We're going to be coming right back. Dow Industrials right now up 285. NASDAQ up 94. S&P's up 41. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Corby Yamada. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We have the Dow Industrials up 288, NASDAQ up 96, S&P's up 43. Each one of these folks, bottom line, you had the Fed come out. They changed the language inside their statement from considerable time. They dropped considerable time about the rates going up. They added patience. Bottom line, you had the S&P go up 40 points. The high of yesterday was 2016.89. We are at 2014.10. Inside the SPY. So what do we have inside the SPY? The SPY out here today did 244 million shares. We had still come down at 259. This does set up. It closed at its highs. We're down off a high of 208 in the SPY. Got to 197. I do expect you're going to see this probably try to get into 202.93. It's about another, that's a $1.15 from where we are right now. Dow Industrials. The Dow Industrials closed up 288. That is from the price point of coming down from 17,991. And the Dow didn't get over its high of yesterday. We did get back over the range that we broke down from 3 days ago. That range was the September swing points. Bottom line, though, Dow just doesn't have the juice. This does not change the texture of testing the October 15th swing low either. NASDAQ composite. Would you have the composite? Nice bounce in the composite. The composite was up at 100 points at one point. 46.51. You closed at the highs too. We closed at 46.44, up 96 bucks. The composite can get into about 46.74. That's good. Now the composite would not be an ABC structure on the way down. The Dow wouldn't either, actually. It's a close call, but what you have here is this. So we hit a low yesterday in the composite of 2.2 billion. We went up today at 2.2 billion. That's a close call. I mean, if the volume died in the vine as it hit this 4674, then yeah, you could basically make that deal. But let's go take a look at the three Qs. The NDX 100. NDX 100 wouldn't be an ABC down also. Why? Because you went up today with 77 million shares. We went down yesterday with 65 million. A correlation of an ABC structure on the way down is you go down with volume, up with lighter volume. As you can see, we went up with volume. Gold contract. Bottom line, can't whack gold down. Gold was, it's down $7.20. You're at 153,000 contracts. That's light contracts. You closed at 1187. The low of yesterday was 1187.80. Bottom line is that gold still wants higher price. And in that context, this is what's really wild. The dollar index, folks, okay, was up over 1,000 points when the statement came out. You have 60,000 contracts, which is big. That's saying that the dollar index, again, is going to go after 89.79. It's only 500 ticks where we are. But yet that didn't whack gold and or the gold equities. Bonds are still screaming they want higher price. Amazing, but bonds are building an ABC structure on the way up. Let's go to Mario in Boston. Hey, Mario, what's going on?
Hi. I want to look at Thompson Creek.
Thompson Creek. Okay, so let's take a look at it. The symbol is TC. This company. Let's see what they take in a lot of money. There's no doubt about that. So let's see. They mine and process Mobiline. They take in $800 million. The low is 137. The high is 317. Man, the company takes in so much money and just got absolutely smoked. So this is down from a high of 27. You're at $1.60. Let me put this on 3 years. Okay, so I'm going to change it to a 5-year monthly.
It looks like very cheap company. I'm just looking if it's a good good time to enter.
Yeah, no, I'm with you, man. I mean, it's pretty amazing when you see something that takes in the $820 million dollars and yet is only trading at $1.64. That's what I'm trying to figure out myself here. 164. So what you did out here today, you had what I would do is this. You're up 19 cents today. I would wait for another sign of strength and you get back inside 174. So, Mario, what a sign of strength is this. You had it today. It's wide price spread, accelerated volume. You got one more of them, then you could buy a pullback. You know, because it looks that, yeah, you could, this probably wants to make a run to $2.90.
Correct.
And
yeah,
that 290, where I'm going from that, that's the August 20th high. It does have volume. It's a high swing. But I wouldn't bite yet. And the reason I wouldn't bite just yet is that when you only get one sign of strength off a bottom, you see that happen a lot. You know, I mean, this is a stock that's got killed. You know,
correct.
We just went straight down from $3 to 137. Yeah, I just wait, and I don't. It's just pretty. It's pretty amazing that. Yeah, 825 million. Oh, I see.
Very cheap.
What, you know what's going on though? This is, man, you talk about a volatile stock. So check this out, folks. Last year they took in 434 million. This year 825. They expect to take in 639 next year. So what may happen is that the market itself might say, you know what, you have fluctuations of 200 and 400 million dollars per year. That's like a stock getting 25 to 50% either lighter or heavier in volume, and that's what you're probably seeing out there. People just don't want to take that type of speculative risk. But listen, you get a sign of strength, buy the next pullback, man.
Great.
Okay, Brian.
Thanks so much.
Have a great one, man. Have a safe one. Some of the Dow stocks out here, in fact, I think every Dow stock was positive out here. It was. Every Dow stock was positive out here today. The leader out there was Chevron. That was up 432. ExxonMobil was up 261. Big Mac was number 3. That was a dead cat bounce, though. The laggards inside the Dow, IBM was the biggest laggard. Caterpillar was next. Boeing was there. Inside the NDX 100, what was putting the juice inside the NDX 100 today is that you had Vipul Communications. That's the Russian telecom deal. Netflix was up $17. NVIDIA was up 79 cents, and Tesla was up $8. Taken away from it was Expedia International. That was down 98 cents. You had Wynn Resorts off 155. Xilinx was down 28 cents. And you had Cognizant Technology down 21 cents. The move in the dollar was extraordinary out here. There's no two ways about it. What is the disconnect right now, which is pretty wild, is that it still didn't bring gold into lower prices. Oil market looks like it's going to get lower out here, folks. Oil today had a spike higher, nice spike higher, by the way, got up to a price point of $58.98, and then just gave it up in spades, pulling all the way back down. Bottom line is that what you have inside that oil market is you have carnage that was very fast, very furious, and the bottom line is that the Saudis basically are not turning off that spigot. And if the Saudis don't turn off the spigot, guess what? That is huge amounts of oil, and they got to take some pain for a longer period of time to do what? To put some folks out of business. That's what this is all about, folks. So we're getting a break in the meantime, but what this is all about is basically putting companies out of business so that production goes down, so they can turn around and basically, get that price going again. Let's go to Larry in Dallas. Hey, Larry, what's going on?
Happy holidays.
To you also, man.
Thanks. I want to look at DDC, Dominion Diamond.
DDC, Dominion Diamond. Okay, so let's take a look at this baby. You stay right there. We're going to be coming right back. We're going to be looking at DDC. Our phone number is 877-927-6648. Dominion Diamond, they mine and market rough diamonds. We're going to be right back, folks. You stay right there. Dow Industrials finished up 288. NASDAQ up 96. S&P's up 43. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're talking with Larry from Dallas. We're talking about Dominion Diamond Corporation. They mine market rough diamonds. They have mines up in the Canada, Northwest Territories. The low is 1181 for the year. The high is 1822. And it's trading at 1788. And this thing in the last 2 weeks has just gone from 13 to 1788. So what are we doing with this, Larry?
I'm looking for an entry point.
Okay, so you know it just went from 13 to 18, right?
Correct. And it hit a new high on Monday.
Right. So what you have is that your swing high from May of 2011 is 1823. I'd let it get into that first and see if it can take it out. Because what you have, I mean, in 2 weeks, the stock just went from $13 to $18. Well, 18.03. You know, if it takes it out with volume, then you buy a pullback. You know, right now, the risk versus the reward is not in place. You know, because just a normal pullback. So watch, a normal pullback, even after a run like this, can bring it down to 1450. That's, you know, quite a run here. Do you know what I'm saying?
I understand. Thank you for the good info.
Okay, man. Have a great one. Have a safe one. And this company here, it's let's see, this company, that's quite an expansion. They must have found more diamonds or something. Either that or some of these. You know, the last one I just brought up, which is the Mobiline company, that had fluctuations in revenue that were pretty amazing, and this one is the same one. Last year was $345 million. This year they're going to do $750. Now the difference is this one here is looking to do $947 million the following year. So that, no doubt, is big numbers. We go over and we take a look at the XLE, the XLE out here, the oil and gas service sector. What you have is this: is that that's down from $100. You're at 77. Nice expansion out here today, but yet it's going to need more follow-through. You know, right now the XLE is only off the bottom by 5 points. The first place that it's going to get some severe resistance is right where it's at right now, actually about 50 cents higher. That is $77.51. The XLF, we go take a look at the financials. Financials today, $43 million on the way up, and that's not even close. Okay, what you have with the XLF is this: the XLF, no doubt, we can bounce up to $24.58, which is about another 30 cents. But what you're going to see is that you need a monster expansion of volume as you get into that price, because we did $51 million on the way down, and we're doing $43 million right now. Let's go over to Oracle. Man, Dave White is telling me Oracle just come out with numbers. Oracle closed at $41.16. It's trading at $42.25, and numbers go like this on Oracle. The estimate was 68 cents. They made 69 cents. Their revenue estimate was $9.5 billion. They took in $9.6 billion. Their hardware revenue is up 1%. Their operating margin is 46%. If we take a look at where we are structurally, don't even think about it. Oracle's going to close a gap that was left from a gap down of 6 months ago. Actually, I'll pull this up so we can see it. Oh, look at that. Interesting. So we're at 41.16. The bottom of the gap, when it gapped down, folks, was 42.13. That's going to come into that gap. I suspect it's not going to have enough to take it out. JBL. This is a. We don't have a lot of headquarter companies in St. Petersburg, Clearwater, Tampa area, but this happens to be one of them. They have 142,000 employees. I wish they were all in St. Pete, but they're not. It's not even close either. This just come out with numbers. That closed at $20.07. This is trading out at $21.40, so that's up $1.40. Nice little push up there. And this is one of the largest subcontractors in the world, folks, that makes everything. The estimate was 47 cents. They come in with 55. That's a good number. That's the bottom line. Top line, net revenue. Oh, that's interesting. They see the second quarter going down. Oh, no. I see. That's an estimate. Okay, the revenue, the estimate was $4.3 billion for first quarter. They took in 4.55. For the second quarter, they see 4.15 to 4.35. So they see their revenue beat this quarter, the top line and the bottom line. What they see next quarter, however, is that the top line may go down just a bit. Right now it's up $1.50, and unfortunately, J-Bill is going to have a hard time staying over this $20.85. Come off the high in 2013 and come down. It was vicious with volume. And that it's going to take a lot of buying to basically get rid of that supply line on J-Bill. And what we do have, yeah, it definitely is. J-Bill's been in consolidation now since February of 2011. That's how that is shaken out. What we have after the bell tomorrow night. We get Nike and Red Hat coming out. If we go over and take a look at Nike, Nike right now is trading at $94.50. That was up $1.29 out here today. Last time I come out with numbers, you had a large gap top side, and Nike looks like it's an ABC structure on the way up. Anyway, let's go take a look at this on a longer term basis. So on a monthly, yeah, you get ABC up. So let's see what it is. Your B point is 80. Your A can be 42, so you get $38. 70, 38, it's 108. It looks like it's an ABC structure to 108, and right now you're at 94. That's on a monthly basis too. We took out in September you had 108 million shares, taking out the B point of 81. So it looks like Nike's going to be getting to be higher priced tomorrow. Red Hat RHT, that's going to be coming out tomorrow night too. And what you have is Red Hat is up $1.25 at $59.48, and we'll see where this baby shakes out. Yeah, the big news out here, no doubt today, folks, is that we're going to be basically having a lot more relationship with Cuba, which I personally think is a beautiful thing. Why? All you have to do is use some common sense. You know what the amazing part, what blows my mind, is that you're talking about, we've had business with China for 35 years. We've had business with Vietnam where 336,000 Americans, 33,000 Americans died. Okay? And it's like, oh, you're not going to have business with Cuba, which is right off our shores, for what? You know, bottom line is that Havana, here I come. There's no two ways about it. And what you do, you know what's amazing? I've never been there, but I've flown over the island many times. The island is huge. I mean, absolutely huge. So it's going to be, it's just going to be great, basically going there. Cubans themselves, we have Ybor City, and Ybor City in Tampa, folks, was developed basically by the Cubans, by cigars, and we still have some great cigar bars down there, and the people are just dynamite, man. I mean, just absolutely dynamite. And it's bottom line, I think it's going to be great, period. And I think that the folks that are fighting it, Ruba, we get people that are fighting this, like, what are you fighting it for now? They're fighting a battle that they're 50 years later. I don't get it. Stay right there. We're coming right back. Dow Industrials finished up 288. NASDAQ up 96. S&P's up 43. We're going to be right back.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 288, NASDAQ up 96, S&P's up 43. Now let's go over to our man, Mr. John Logan. John starts us off every trading day right here at TFNN, folks. Outstanding program, 8 o'clock to 9 o'clock Eastern Standard Time. And don't forget, all the programming at TFNN, get right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, you just go to TFNN.com. You hit the TV on the top right-hand side. That will get you the audio, plus it also gets you the video. Now, as you come over to TFNN, folks, okay, John has an outstanding scanner. In order to test drive that scanner, you can go right to newsletters. You hit services at newsletter. You're going to see the TAS profile scanner. It's an amazing software tool that basically gives you the profiles on all markets. And we're talking about all markets across the world. We're going to talk a little bit about it right now. Why? Because it's on time. And what I mean by on time is this. It has a breath analyzer inside of this scanner. And what we have is that when the breath turns from positive to negative, negative to positive, it gives you a good head start on what is happening internally inside the marketplace. John Logan, what's going on?
Hey, Tom, good to be with you today.
You too, man.
Man, how's the S&P treating you here?
I'll tell you, that's boing! No doubt.
You know, we talked about that a lot. We talked about the breadth changing, and the cool thing is the weekly. We had been looking for kind of a weekly coincidental situation to line up, and that night on the March contract on the S&Ps, we talked this morning and yesterday about 1968.
Yeah.
Being the trigger point, and this morning pre-market, as we were speaking, I think between 8 and 9 during the show today, we hit that 1968 area to the tick.
You did, 1968.25, right?
Yeah, and the breath was still hanging in there on the weekly. So, we said, you know what, you got to take a shot here. The Yellen thing is going to happen today. They're not going to freak anybody out, as their pattern has generally been.
Yes.
And we've what do we have, a 40-50 point rally off 68, and
so to 211, right?
Yes. So the good news is you could have oriented some stops around 68, obviously based on your appetite for risk below there, but it's a great high probability area to trade off of. So, and we had the same situation on the euro. The dollar's been climbing. Obviously, the euro.
Okay.
I'm gonna pull up an S&P chart really quick here in the den. There's that 68 area, and this is a weekly chart. So we had a little noise yesterday below there, but that's been something that we've been talking about. And as we had looked at the breadth on the scanner, and there's the weekly breadth right there in that little speed dial. And I'm going to pull up our admin charts here really quick to show everybody. We talk about crossovers between negative and positive breadth, never been disseminated before. And as you can see, on the 17th, we had that crossover back to positive, and we're still positive on a long-term basis. Now, on the dailies, we've kind of been negative here, so we were looking at our daily charts. I'm going to pull up our daily charts on the S&Ps. And as we had looked at this 2052 area on the March contract, that gave us some sell signals in the interim. So as we kind of got in that vacuum between those weekly unfair lows and the daily unfair lows, we were, the scanner basically gave you this MO via the breadth indicator, and also these inflection points to leverage off of from the short side as we had kind of imploded down for a while. And then we caught a good bid this morning around 68, and man, it was off to the races. Oof.
And folks, you can test drive the profile scanner by coming over to our website at TFNN, going to newsletters, then going to services. You'll see it right there. Because depending on what time frame that you decide that you want to be trading on, it is one dynamic piece of software. What's so cool, John, is that we have high volatility right now, and what's so cool, of course, with high volatility for traders, folks, is that the numbers, they go down and up very quickly. You've got to expect bounces, and you've got to expect huge bounces like this. So the next one, and I remember when John had nailed gold when it was going down, each and every bounce in gold, and I'm going back really, last couple of years, what happened with the scanner is that it was coming right up to the profile, right? And then bang, you'd have the sell-off again,
Well, it gives you a chance, hopefully, to eliminate one side of the marketplace.
Yes.
And that means, should you be taking longs only? Should you be taking shorts only? I want to show you something really cool, because I know we only have a little bit of time here. I want to show you crude oil.
Cool.
Because I know that's been in play, too, here.
Yeah.
So let's just take a look. This is our 240-minute grid on crude oil, and we had talked about letting, as we had been scaling.
Look at that. Oh, my God. Yeah.
As we've been scaling down, okay to be short, not okay to be long on a long-term basis. We always talk about inflection points, and the scanner basically, and I'm going to pull up the scanner again. I'm going to pull up, I'm going to get rid of my S&Ps here. I'm going to select none. I'm going to pull up my futures. And where's my futures here? Am I missing something? I'm not seeing my futures tab.
And as you're in your car driving, folks, don't forget, all these programs are archived. So John is pulling up the scanner right now, and we're looking at clocks on the top that have a 60, 240 daily and weekly. And, they're basically green, red, and blue to give you real-time access as to what those markets are doing right now and right here. Go ahead, sorry.
Yeah, no. So what I wanted to point out is, I'm looking at crude oil here, and we've definitely been in a downtrend. We've got a yellow cell there, so that means we might have a new profile appearing here. But the inflection point's in force right now. The bottom of our profile is 65.13. Obviously, that's well above crude oil's price. But I want to pull up our 240s and show you that 58.73 is the top of our range, and the inflection. Yeah. The inflection point to key off of there if we have any rallies. So we always look at this, and there's that 58.73 area, and today we hit a high of 58.98, very close to that. Crude oil's a little noisy, so you're going to have to kind of give it a little room there. But, as we scale downward and use that long-term okay to be short, not okay to be long,
yes.
We want to look at, there's an inflection point there, 55.39, and as we if that doesn't work out, you got to get stops in. You got another place to pick a battle up top, and the scanner gives you these inflection points real quick and easy, so you can kind of pick your battles in high probability areas. So this kind of ether kind of move up with crude oil doing a little bit of a relief bounce. That using the smaller term time frames to basically kind of mitigate the trade still as a bearish trade, you've got a really cool area, 58.73, to pick a battle on the short side. And by the way, that's a $3 move in crude oil intraday off of that inflection point. So, this thing, we personally trade off of this, and it regulates a lot of trades for us as well as in the institutional world.
Yeah, no doubt.
Good.
Now that move today and crude, that's as cool as you can get, man. So,
yeah, and it's good to be patient as a trader, Tom. As you know,
right.
It's almost like you want to let the market come to you, and you want to, be in full confidence when you put trades on. And this thing allows me personally, along with quite a few other folks, to feel like, I've got conviction about possibly what I'm doing now, and
sure.
I want to wait until that market comes to those inflection points. Here's the euro. We talked this morning heavily about yesterday actually waiting for this to come to you, let the market come to you. Here's that inflection point on the euro, and just hoping and praying that the euro would bounce into some high probability area.
Right.
Well, here we have, and this is again on the scanner, 125.74, and this week, as in yesterday, we reached a high of 125.69. So we were 5 pips. A little noise around that major inflection point on the weekly, and then when we get back down below the dailies, then you are in kind of double up stage.
Sure.
So this really regulates my trading life, and I hope a lot of other folks out there can find some use for it.
And when we talk the commodities, the indices, folks, you like equities? John has all the equities in there too. The bottom line is that it's amazing what you can do. You can go through the breadth of the NYSE, the S&P 500, the NDX, or whatever you want. That's the real bottom line, which is just amazing. And we're not just talking. I know most of our folks are trading American markets, but the bottom line is that you want to go through them in Singapore, great. You want to do China, great. You want to do,
right.
It's an amazing piece of software, man. It absolutely is, man.
I appreciate it. I'm loading up our S&P 500 stocks right now, so the folks out there can see. You basically get to look at the breadth, which is a guidance tool.
Yes.
Really figure out which way the market is, hopefully will coincide with this, and
right.
then you kind of look at your stocks and be able to use some filters here, and I'm going to do that after our break.
It's a beautiful thing. You stay right there. John and I are going to be coming right back.
Okay.
You can test drive the scanner, folks, by coming over to our website at TFNN. Go to newsletters, go to services. You're going to see the TAS Market Profile scanner right there. Dow Industrials finished up 288. NASDAQ up 96. S&P's up 41. We're going to be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We had the Dow Industrials finish up 288, NASDAQ up 96, S&P's up 43. We're talking about our man, Mr. John Logan, who kicks us off every trading day right here at TFNN. And right now, we're talking about the stocks that are up inside the TAS Market Profile Scanner. John, can you just explain to the folks a little, I know that we know it upside down, but exactly what the profiles are and what they do and what you're tracking inside the scanner?
Yeah, I'm going to...
What a mouthful, huh?
Yeah. Yeah, and I got 3 minutes to do that? Okay.
That's a beautiful thing, yeah.
Well, I'm going to go back to the euro really quick.
Oh, cool, yes. Thank you.
I'm going to just kind of take a look at how we've been very bearish on the euro. You've been very bearish on the euro, but how do you just not kind of put the weight on the short side,
okay,
and not kind of be able to regulate the trade in your the way you want it to go, and be able to put stops in and things like that. What the scanner really does is it identifies and basically tells you where the fair auctions are, and that means, if you're looking at a bell curve and you see most of the data lies within 2 standard deviations away from the mean,
yes,
you've got most of the data in the sample lies within that so-called balanced area.
Okay.
And it's the same thing that we've done. We've put that balanced area in a relevance of volume versus price. Instead of, most of the time people look at, volume versus time. So they'll see volume on the bottom of their chart, and they'll say, okay, in 1 minute, here's the volume in 1 minute, here's the volume in 1 day. So we've looked at volume versus price, and we put it kind of in a horizontal manner and allowed people to see what is, where has price really relative to volume lied within that kind of fair, balanced area, that meaty part of the bell curve.
Yes.
And when prices get away from that meaty part of the bell curve, they tend to move relatively quick because they're outliers in the sample data, so to speak. That's the quickest way I can explain it.
Yes.
But as we look at the euro and as we look at this, we've been able to say, okay, the long-term situation has been bearish. We're below profiles significantly on our weekly. I'm looking at the daily. So as we had got those trigger points around 135.52 on the weekly, we got a great signal and we got a retest of that level, if you will. Me and you were talking about that when it happened. Good Lord, this was back in... that was a long time ago.
Yeah,
but it's been a short play since then, and we used the dailies and the 240s to regulate that process down. And I'm looking at our dailies here, and as you have seen, we've had one little blip, even to stop ourselves out on an intermediate basis, not on a long-term short basis, but that was back in middle of October. We kind of went above profiles there.
Right.
But most of the time, we've been able to use the inflection points on the top of the profile or the bottom of the profile to either leverage into the trade from the short side as a sell resistance in a rally format, or be able to sell breakouts on the downside. So here was a sell resistance area here.
Yeah.
And then here's
let
a sell.
Let me ask you something. If you're in the car, folks, he has the euro, and we're seeing the counter trend bounces on it. And as he just said, there was once that it got above the profile. So when you come above the profile, right, and it looks like this was above the profile for like 3 or 4 days, right?
Yep.
And then you come into the resistance. Was that the mark of the resistance? Was that level up there? Does that get developed, John, from being above it? How did that? You see what I'm saying?
Actually, when you see that orange bar there, that signifies that we're going to get a new profile, and this profile was in force before this market hit that profile.
Right. Cool. Okay.
So this is a forecasting tool most of the time that allows you to kind of put your seatbelt on, buckle yourself in, and wait for the market to come to you. And that makes trading, in my opinion, so much easier when you're, instead of like, there's all these unknowns, you're watching CNBC and there's all these things going on. It's like, you know what, screw it. Let's just kind of count on, our thought process, and then let's wait until the market comes to us. And this is basically the inflection point to happen. And then we have, it provides targets too. As you can see, we got met some targets down there.
Yeah.
We kind of fluffed around up here, and then we got the breakout. Okay, to get back in the market on the short side on the intermediate time frame.
Yes.
as we had that rally back on the euro, like I'm talking about, we did breach the daily profiles. We never closed above, but we've got kind of big mama sitting back here, the weeklies, and the weeklies take precedence. Yeah, the weeklies take precedence over the dailies. And by the way, as I look at the scanner, I don't need the charts. I just get the inflection points painted for me, and I go to my product, and I know what the score is, and I know where the markets are either balanced or imbalanced on the upside or imbalanced on the downside. Now, the second part of this tool, which is really, really cool, is this breadth up here. Now, this is a compilation of different indices internals making up. Are the internals on the weeklies or on the long-term basis, are they still breadth positive or breadth negative, and are the internals on the next level breadth positive? This has never been disseminated before. That's why this thing is so cool, because we're going to be able to disseminate profile information in a consolidated manner that basically where the internals of the market are either balanced or imbalanced and which way they're weighted towards.
In a split second, too, folks, okay?
Oh, my God. It's it makes your life a zillion times easier. I want to show something, and I know a lot of guys out there trading stocks. I've got the S&P 500 up here. It paints all the pictures here, everything. I'm just gonna do a little filter here, and there's a lot of neat little innuendos to this. But I'm going to say, we had a pretty good rally. I'm going to look at the weekly, daily, and 240 time frames, and I'm going to see what is really not cooperating with this bounce up, trading below the box.
Yes.
And I'm going to wait till this refreshes here.
How's that? I like it.
That was a little timer I have over here. And as that refreshes, we're going to see that out of 500 S&P stocks, guess what? There's five stocks that are showing extreme negative connotations here.
Right.
All right. And one of those
is Blue. Look at Big Blue. Oh my God, IBM. Right. That's a dead dog. Yeah, holy cow.
And you know what? We didn't have to use the scanner to find Big Blue as a piece of crap, as a total piece of crap.
Right.
But guess what? It's proof of theory is right here in the pack of dogs.
Right.
And by the way, the inflection points are provided to you with the mouse over. So AES Corp. Let's look at that, because we all know Big Blue's a piece of crap. Let's look at AES, and let's just kind of tee that up here.
Yes.
And show that
they develop generation plans and distributions. Okay.
Yeah, wow. So there's the weekly. We're below profiles. Here's the daily. We're coming up into an inflection point, which is a high probability setup for the short side. I hear the music.
Listen, man, you have a great one, safe one. Look forward to that show tomorrow.
Awesome.
Have a great one, John.
We'll be here.
Thanks for being here, folks. Have a great night, safe night. Go get them. Wow!
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
This is TFNN.